Hello guys. I did not put an alert for this live, but most of the guys who follow me, they know it's at 10 o'clock p.m. Eastern time on Sunday, for all the weeks and the months and last year, the other year. Hello Bobby Sick-Killer, thank you for coming. Realistic 915, thank you very much for coming. Now, for the subject of today is nearly the same as the subject of last week. It means we are dealing with this short selling in either in the market, in the general market, or in some stocks, and we try just to see. Some people, they say, well, this short selling is not ethical. Okay, how can you sell something that you don't own? Which is something that most of the people they don't like. You say, okay, I own some shares, for example, of Facebook. Why someone comes and take my shares and sell them in the market, and the price goes down, and I will be hit? Okay. So is there any other way they can do it without taking my shares? No. Okay. Hello, Rahmatullah Moody. So in this video or this live, I will try just to give you some explanations, although I know most of you guys, you know what is selling short, and whether it is ethical or it's not ethical. It's part of the game of Wall Street. Okay? Bobby Six-Killer said the market needs sellers and buyers. No. Listen, you should understand the difference between selling short as a seller and between someone who sells his own shares. So here is the problem. Now, selling short, it's not your shares. You don't own them. And this is the problem. That's why some people, they say it's not ethical. Why you sell my shares, for example? Let's say I own right now Facebook. Okay, just an example. And Realist 915, he gives me this example of GameStop. Listen, I'm going to do a video on this stock, not live, but I will do it individual, because I will get you some guys some information, and I make a video. I know a lot of people have talked about this and all the news, and you have seen a lot about this GameStop. But this GME, it's not related to selling short or going long. No, GME, like some other stocks, it is manipulation. Okay, it's manipulation. It's like a scam done in the market, and the Security Exchange Commission is doing some research and some investigation about this stock and the people who have been buying or selling short. But this is not our subject today, because last week we spoke about manipulation and GME and other kind of stocks that the media has dealt with. I will make a video exclusively about it. I will try to search, because it needs a lot of search, and it is not just because selling short is every day. Okay, And Realist 915, he said, was it a good idea to sell short GME at for? No, they sell short. What is it? Warren Buffett Hathaway stock, which is at 350,000 a share. It's not 480. 480 dollars is not that big. Okay, it's not that big. But you say, is it good idea? Yes, people that are making money. What do you think? What do you think when the people they buy and the stock goes good? They make money. Now, when they sell short, are they making money? Yes, that's why they do it. Okay, Fabian, hello Fabian. So in this live, I'm trying just to give you some information about selling short, but the stocks that have been in the media, there are a lot of stocks. Every year there are a lot of stocks like this. It's not only one. Okay, this I will make a video exclusively about GameStop, because this GameStop is a company that it is going to bankruptcy. You know, you know, this company is not making any money anymore, and it has a lot of debts and it has a lot of troubles. So when the price goes like this, it's not because the company is doing good. It's just a kind of manipulation. It's like a scam. And this, I have talked about scams when? Many years ago. I have this video. If you go to it, you will find what I described is the same as what it happened. And in the future, it will happen the same in other stocks. And it is happening every day. So it's not something that it is big or something. Tony, you said you wouldn't be able to short GME at 480. No shares available to borrow. But listen. Tony, try to understand that you say there is no shares. Why there is no shares? Because almost all the stocks, all the shares have been shorted. And the people, and why the stock collapse? Try to see GameStop. Why it collapsed? If you said, for example, you said there is no more to sell short. Why GameStop collapsed? From 480 it goes to 19 in 2 days or 3 days. Okay, so these ideas, I'm trying just to explain you, Tolly, and the other guys here. I'm trying just to explain to you that these things are very complicated. The only ones who understand what's going on are the hedge funds who do this. And when we say hedge funds, we see Wall Street. And when we say Wall Street, it is Wall Street. It's the people who can move the market. Now, in 2008, when the whole market lost 50%, even Warren Buffett, the biggest stock in the stock market, it was, I think, 195,000. It goes, I think, to 85. So who has done this? When we say Wall Street, it's not only Wall Street, but it is all the traders in the world. Understand that the whole world is looking for stocks like this. When there is a stock that a lot of people, they come to it and they hit it, all the people will do the same. Okay? So this idea of there is no shares, it means that the whole stock float have been shorted. Now, what does it mean? It means it is a catastrophe for this stock. Like GameStop, it was a catastrophe because it goes to 480 and then it collapsed to 19. I didn't check afterwards what did happen. You see that? So these people, you don't play with these people, it means Wall Street guys, because they have all traders of the world with them. It means for them, they initiate the problem, they initiate the selling short, and all the traders of the world finish the job. When they finish the job, Wall Street, they buy what they sell short and they exit every day. So they are not stupid to stay to the next day. Except when they have shorted so big. Okay? After the market close. And this happens with, what is it? I will show you guys, because you have an idea about selling short, but I will just give you a general idea. Okay? So when the stock market, even in Europe, in the 15th century or 16th century in Amsterdam, it begins with two stocks. It's the same principles that they have done. Okay? They have done going long. It means you buy thinking that these companies will be doing good and the price will be appreciating. So you invest your money and then you make money in the future for many years. So you should wait. This is investing. Now, and they do what we call selling short. Okay? Which is very, very easy. You just borrow shares from the broker. He give it to you. And then you sell them. And then you buy them later. So this is the normal thing. But the thing is, a lot of people think that selling short is not ethical. It means it is not based on the reason. Why would someone sell something that he doesn't own? Which is common sense. For example, you own. For example, let's say I own Facebook. How can the broker take my shares without my permission, and he gives them to another person to sell them in the market? Because how the market goes down? It's going with selling short. But there are other things when it is not selling short, which is just people sell. But believe it or not, investors, they don't sell. They don't sell because today the CEO was sick, or he get married, they buy more shares, or because he is intelligent, or because he made a new product. They don't do that. This is stupid. That's why this word, well, I always, when I see this word, it's misused by the media. They say investors fear. The investors fear today. That's why they sell. No, investors, they don't sell because of news. It is just people who are trading. They sell because of news, or they buy long because of the news. And they sell short because of the news. Okay? Now, I will give you now every day if you want to see the stocks that have been shorted, it's every day. So let's I go to Finviz, if I can see, and I will just show you let's say okay. So I'll give you an example right now, if it's possible. I don't know if we can get. I will see if we can get the thing working. If it doesn't work, it seems to me okay. It seems to me it doesn't work. So let's make a picture. Let's make a picture of it, and I will show you. Okay, guys, look at this Finviz here. It's for Friday, last Friday, since today is Sunday. Guys, if you want each day to know the losers, the top losers, you can check this. So I'll give you an example. Now, there is a stock which is called AACG. This is a penny stock. Okay, I'm not going to. We are going to see this AACG 55.73. Okay, let's go to it. Okay, AACG. I will just show you. So be careful, guys. Okay, guys, look here. Look to the chart. AACG. Now, we have two actions in this stock. Okay? Look at these two actions. Now, we have this one. It's called Education and Training Services. This is the industry. The sector is Diversified Services. And the stock is called ATA, Creativity Global. Now, today, this stock, it means on Friday, 5th of February, as you can see here, the stock has gone down 55.73%. It means 50%. Let's say it's half. Now, but you can see the previous day, the stock was $1.36. It goes to $19.75. And then it goes down to $14. Now, it opens at $3. So it was $1.36. And there is a gap up, as you can see. Let me show you more. Okay. To make it big. Now, you see here that there is a gap up. Okay, here. It doesn't show very, very well, but there is a gap up. So the stock was 136. So it was shorted I don't know, it's because of the news or because of manipulation. So it could be two things. Now, news is something normal in the market, but manipulation is not normal. Okay? It exists, but it is not, it is a fake, it's like a fake trading. It's not a normal trading. So, you should see the news and see if it is earnings. Now, if it is earnings, it is normal that the stock can go from $1.36, it goes to $19.73. Okay? So it's too big. Do you understand how much it is? 136, it goes to 1975. Okay? So it's about, I'm just guessing. It's about 1,500%. Now, what does it mean 1,500%? It means if you put $10,000, you can get $150,000. So this is why this buying is too much. Okay? Let's say someone has bought at the end of the day on Thursday at 14:30. Now there is selling short with other people, but selling, and it is at 6:33. Okay? So it was 14:30 on Thursday. And the second day, it is 6:33. So from here, I just show you that it was 14:30. It has been shorted and it opens at 10. So this information, I'm going, guys, to show you this information by numbers. At least you understand this. So on Wednesday it was 136. 136. It opens at 367. Okay. It goes to 19. Let me see what 1975. And the close is 14:30. And on Thursday, not on Thursday, we still are in Wednesday. Wednesday, after the market, okay, so they sell short the stock, okay, they sell it short, so it opens at 10:08 on Friday. This is the open, and it goes down to 6:33, which is the close of Friday. Okay, so I will make just an example of this. To check what's going on. So I will just try to take this, and I will just show you. I just show you this example. So the stock could be big or small. It's not important. What is important is to understand what did happen. Okay. So I will give you here, since you are watching, I will give you the explanation. At least you understand. Now, so the stock here, this is now here. So this is Wednesday. Okay, Wednesday. Now, how much is the close? The close here, it was 136. Now, after 4 p.m., what did happen? So, after 1 p.m., there is a news. Okay? News, it could be good news, it could be bad news. But this time, it seems to me that it is good news. Okay? Either it is good news or it is manipulation. One of the two. But for me, I can't know until I see what's going on Wednesday. So guys, if you want to understand, there is a gap up, okay? Okay? There is a gap up from Wednesday to Thursday. Okay? Now Thursday, it opens here. It opens at 3.67. Okay? And because of the news, and they see a gap up, so people they just in the morning they come up and buy, and the stock had been going up in Thursday until it reached 1975. Okay, it's a big deal, guys. 367 to 1975 in the same day. So let's say you are from the guys who just see there is good news, and the next morning you bought, let's say 367 or 370 or 80 or 4, and the stock goes to 1975. This is a big profit in one day. So that's why in some cases day traders, they can make a lot of money. Okay? Now, this is Thursday. Now, what did happen on Friday? Now, before we go to Friday, understand that 4 p.m., okay, on Thursday, people begin to sell short. So on Thursday. So here, the stock was here, but it has been going down after 4 p.m. on Thursday. 4 p.m., it has been going down. Now, what is the open of a Friday? Friday, the open was 10:08. Okay? And the close of Thursday, the close was 14:30. Here. It goes from $3.67. It goes up to 19.75 cents. And at the end of the day, at 4 o'clock, it is 14.30. This is Thursday. Now, it has been shorted after the market close because it was going down. It was shorted here, although it was going long, but later it was shorted. And some people begin to sell also. So two actions, selling and selling short. Selling, it means if you own the stock, you are just a seller. This is normal. You buy and you sell. But the other guys who are selling short, they don't own. Okay? So the people who stay, they take their shares and they sell them short. Okay? Now, from 14.30, the stock goes to 10. From 10, it goes down to today, Friday, 6.33. Now, 6.33 is the price of Friday. But what is the price of Thursday? It is $14.30. $14.30. It means the stock lost 55, as it is shown, 55%. But understand that this day, which is Thursday, the stock has been going like 1,500%. This is what you should see. Okay? Because whatever happened in selling short, it will never be like going long. Going long is always robust. And the selling short is always, if it is 100%, it's not it could never be 100%, but it could be until 99.99, because there is no what we call 100% in selling short, because the stock will not exist. But this has never happened. Okay, it has never happened. But the thing is, the stocks will be delisted from the exchange. If the stock is shorted, every share, everything is shorted, so the market will collapse. Okay? So this is just an example of what's going on, but I will continue, guys. I will continue my explanation. At least, guys, you get an idea about this selling short. Selling short, it happens daily. It is just like going long. Why there is activity? There is activity in the market. Why? It's just people think. Those people who think that the market today will be good, whatever you use as a strategy, day trading or you use a swing trading. But here we try to focus on day traders, because these are the guys who trade always. So the people, they don't know what will happen tomorrow. So they use any means. They use, for example, news or stocks that have been shorted, or analysts speaking about companies. It means any trader has his own means to do business. And most of the traders in the day trading use news. But the guys who do manipulation, it is them who make the news. Okay? Like all the stocks that move too fast, either up or down, it means there is some kind of news. So the stocks doesn't move by themselves. It means there are buyers and sellers. Okay? So we go back to this idea of is le Mont Blanc. Comment allez-vous, le Mont Blanc? Et pourquoi vous parlez l'anglais? Pourquoi ne parlez pas le français? Le Mont Blanc, he said, why are you wearing gray? No, I'm not wearing gray because of the market will collapse. It is any shirt that it is in my closet. I just take a shirt and I don't care. Someone tells me, oh, you wear red. Oh, the market will be bad tomorrow. No, man, I am not forecasting the market. No, I deal with the market as it is. What I see, and then I act. I don't act blindly. For example, you say tomorrow will be selling short, or tomorrow will be a good day. No, I don't do that. I don't predict. So, yes, I know. Le Mont Blanc. Le Mont Blanc, his name, it means the white mountain in French. Okay, no problem. So, let's speak now about selling short. Although I have explained all many times, but since we are just discussing this subject, if it is ethical or not, I'm just trying to explain to you again how this works and what the brokers do, and just in general. Okay? So, let's go first explaining you the thing, and then we can go back to your questions, guys, and we can just speak about them. Okay? Now let's go to our So, let's say this is for today. This is a candlestick. Okay? Candlestick, it means, especially when the stock is going up. Let's say this is Thursday. We take the same example. Okay? So, this is the close. Okay? And this is the open. We are not speaking about the wicks, as someone said, the high and the close. No, we are just speaking about this. Okay? Now, this is Thursday and this is Friday. Okay? Now, let's say the open is 20 and the close is 40. Just an example, okay? So the stock was going up. Now here, does it mean there is no short sellers? No. There is always buyers and sellers. Always. There is always buyers and sellers, because even those who buy in the morning, they can sell at the end. So, but the sellers are two sellers. Just to understand this. Okay? Let's do them here. Okay? Let's do them here. Now, buyers, they go long. This is normal. Okay, you understand this. But sellers, we have two. We have those who own and sell. This is a normal thing. For example, you bought at 20. You bought at 20. You owned at 20. Then you sell it at 40. So you make the profit. Okay? This is as normal as it is. You own at 20. And then you sell at 40, or you own before, it doesn't matter. But we are speaking about day traders here. So you own at 20, you buy, it means you buy at 20 and you sell at 40. Now, what is the second people who sell? These are short sellers. So they borrow shares, then they borrow them, then they sell them at the price. Let's say at 40, they sell them at 40. Let's say in the next day, the market here on Friday, on Friday the price is here going down. Let's say it goes to 15, let's say to $30. It means they sell them at 40 and they buy them at $30 at the end of the day. So they make 50% profit. Okay? And those guys here, 20 to 40, they make 100% profit. Just an example, okay? I just give you an example. Now, so the people who own and sell, let's say, just virtually, they have made 100% profit on Thursday. Okay? And the people who borrow the shares at 40 the next day and they sell them at 40, this is selling short, and then at the end of the day they buy them again and give it to the broker at 30, so they make 50% profit. So you can find both, because a short seller, if he sees that the stock is going up, he doesn't sell most of the time. He will buy long. From 20, it goes to 40. This is on Thursday. But he changed his mind next day and he sells short at 40 and the stock goes to 30. So he will make 50%. So who is making more money? The people who go long or the people who go short? Now, the people who go long and go short are the same. These are the same guys, which are what we call the day traders. So day traders, they don't only go long, they can go long and they can go short, wherever is the day making them. So in general, if I want to simplify this, we say that day traders, they have in the market, they do two actions. Actions, it means what they do in the market. So sometimes they buy long, or then they can sell short. It can be in the same day. Okay? Buy long, sell short. This is what they do. Always. This is always. Depending on the fluctuations of the day. And this is the business of day traders. Okay? Just to make sure you understand everything I'm saying. Okay? So, Le Mont Blanc asks a question. He said, what wicks represent on the candlesticks? You know the wicks or the tails? I will explain. Okay? I will explain this, at least some guys, what does it mean? So I will give you the same example I gave before. Okay? And I will try to explain it. So let's go again. Okay? So as you can see, I want to explain Le Mont Blanc. I will try to explain to him what is this wick. Now, I will just, some people they know, some people they don't know. I'm just trying to show this. Now, this here, it's called wick or it's called tail. It's the same. When you hear wick, it means it's the tail. It means something that it is very, very thin, but you don't understand what's this. This here, the big thing is the body of the candlestick. The body, and this is the wick. There is no wick in there. Now, what does it mean, this wick? In order to understand what this wick, you should understand. Let's take this here. Let's take it here. Now I will just show you what's going in the market in that day. Now you look here. This is the open at 9:30 a.m. Okay, 9:30 a.m. is the open. The market opens here. And I say it opens at $3.67. $3.67. This is the open. Now this one here is the close. $14.30. You can see it in the chart, and I have showed it to you. Okay? Now what's this wick? Now the wick is this here is the high of the day. The high of the day. It means, what does it mean? It means when the people buy long, it was going up, going up, going up until it reaches this high here. This high is 1975. Now when it reaches here we have two actions happen here. 1975. What did happen? Here, the stock begin to go down until the close, which is at 4 p.m. Now, what did happen? Some people begin to sell, and their shares that they own. Either they own today here, they own, or they own before here, all the days. Because all these guys, there are some people who bought here. Maybe they have heard about the news, or they just buy. They don't know about the news. And then we have this. Okay? So, this here, the tick or the wick or the tail, was from the high to the close. Now, in order to understand this, let's give you let's say I give you the 30 minutes. I give you the 30 minutes chart for this 2 days. Let me see here. I will just explain what did happen and when did this happen begin. Okay? Copy. So now look at this chart. Okay, guys, I want just to explain for those who are day traders. They know what I am showing, but those who don't know, this is just the chart with 30 minutes. 30 minutes, it means just to show you what did happen. This is 30 minutes here. If you can see here, this is a 30-minute chart. It means each candlestick is 30 minutes. Now, I will tell you that here, as you can see, there is nothing happen. Then there is something happen here. And then the beginning of the 30 minutes is here. So let's give you when did this happen? Thursday 11 no, from 1 to 2. From 1:30 to 2. Okay? (1:30 to 2 p.m.). This is the candlestick, the big candlestick you see here. Okay? So from 2 to 2:30, this is the 3 o'clock, this is the 3:30, and this is from 3:30 to 4. And 4 p.m., this is 4 p.m. here. The stock closed at 14:30 on Thursday. Okay? 14:30 is the close of Thursday. Now, this is all these here is Thursday. Now, you can see on this tail here, this is the high of Thursday, which is 1975. And the people begin to sell short at the end, and to sell, because the stock, all these half hour, the stock has been going up, and then it finishes here, and then at the end of the day it's 14. Now, this is what happened, and this is how to see the chart. You can give more details if you want to change 30 minutes to 10 minutes or 5 minutes or 1 minute. It will be very, very long. But this is the action that happens from 1:30 to 4 p.m. It means 2 hours and 30 minutes. This is the whole day. Most of the whole day. Because before here, during the day, nothing happened. You see, there is nothing in this stock. You see, there is no big deal. The stock doesn't move that fast. But at 1:30, there is the news. This is the news. Comes at 1:30. Now you can check what is this news, which is afternoon. It means after 12 o'clock, 1 o'clock, or 1:30. There is some news. Okay? Now, there is this tick that he speaks about is the high. Okay? This is the high. And then they sell it short. So let's I will take from you guys, I will take Friday. Okay, since we don't need Friday right now, so I will take Friday. And since we are speaking only about this tick, so this tick, it was going down, okay, from 3 p.m. going down to 4 p.m. This is the tick, like this, that you see. And it's going down. And as I explained, it was 1975. At 4 o'clock, it goes to 14:30. So some people who even they don't participate in the whole day. They come at the end and they see people are shorting the stock. He can short at 1975 and he's short down. At the end of the day, he sold at 1430 and he will be making some money from selling short. So this is the tick. This is the tick, and it happens always in the market. Okay? Now, hope Le Mont Blanc, hope you understand this tick. It's very, very simple. And now, Tolly said, GME stock was 130 short before the rally to 140. Excess selling short does not mean price will drop. Listen to me. Tolly, you are going to explain, you try to explain something that it is hidden. Do you think some people are stupid when the stock is 480? They just go to sell? What if the stock goes from 480, it goes to 1000? Next day or the other day or the other day. So where this selling short comes from? And you push me to go to GME, GameStop. I don't want to speak to it about it today because it's complicated. Now, when you say excess selling short, who pushes the market in 2008 to lose 50%? I will show you because you don't understand something which is hidden. I'm trying just to explain to you. Selling, you will never know if it is selling short or the normal selling because it is mixed up. The volume is mixed up. You will never know exactly. Because if they give us this information, we can make money easily. The day traders, they can make money easily when they see the volume up and down. Who are the short sellers and who are the buyers? But this information is hidden, man. No one will give you this information. The broker, the exchange does not give you this information. That's why when the stock collapsed, GME, it was 480. The next day, how much it is? 19. Who has put from 480 to 19? It is selling. Either selling by owners or selling by sell short. This is what happened. And Wall Street won again. Because this what you have heard about what we call short squeeze and the other stuff. Yes, it happened. But the next day, who has won next day? It's Wall Street. That's why the people who stay in the stock, they have lost it all. Okay? So, when you say excess selling short does not mean price will drop, how the stock will drop from 480 to 19 the next day? How? It is by selling, right? But who tells you how many sold the people who are sellers short and the people who just sell their own shares? Who tells you this? No one will tell you. The volume is general. For example, when I say the volume today, is 40 million shares traded a day. Okay? If you ask your broker, how many from this 40 were sellers, the normal sellers, and how many are the sell short? Either he doesn't know, even if he knows, he will never give this information to you because this is something hidden. They don't give the traders. Yes, they give you the bids and the asks, but this is not real. I can put 1 million shares sell short, and then I change my mind and I cancel my order. So you see it and then I cancel it, but you will never know that it is sold short or no. You will never know. So these are hidden things. So don't go with yourself and try to go inside what is something that it is hidden. You will never see. Because if big traders, they see this information, they see that there are big seller short orders, they see that it is big and they see the stock is going down, they jump and they sell short also, because trading will be easy. That's why now trading in the past and now and in the future, it's always difficult. You will never know what will happen. So you should just look at the price, not the volume. Because the volume goes up, you will never know if it is good or bad. Okay? So I will just show you this because I want to make sure you understand this thing before we move on to something else. Okay? I will give you two scenarios of a candlestick, of daily candlestick. So this is, for example, Thursday, and this is Friday. Now Thursday the stock was going up. We have 40 million shares traded a day. This is per day. Now Friday you find another candlestick and the stock is going down, and it is the same, 40 million shares traded a day. Now, okay? Now, the volume, when it is going up, you will never know if all these orders are a buy, like here, and if those orders are a sell. Now, this information about the volume, this is information is hidden. They don't give it to you. The information is hidden. The volume, that's why for me, I don't use volume. The volume, it just shows you that there is an activity in the stock. So, 40 million, since the stock has been going up, it means the buys are more than the sellers. Now, in the second day, sell short. Now, what does it mean? It means sellers, here buyers, sellers are more than the buyers. That's it. So that's why for me, volume, I don't use it in my trading. It doesn't give me nothing. But the traders, they use just to see where the stock is going. Yes, there is high activity, which is the stock is good to trade. But they don't know the direction. The direction is by the price, not by the volume. So this is just to explain to you this thing. Just in general, but you can go deep and you can search. But understand, guys, that we are searching for something that help us trade. The volume. How does the volume helps us trade? It means we know that this stock has an activity more than before. Okay? I will just show you the volume. Okay, with this AAG again. Okay, I'm just trying to explain. Just give me a minute. I'm trying to give you the volume. Uh, 21 2K, and second one 314 million, and $18.3. Okay, guys, look at this information that they have put. Okay, at least you understand. Now, so these are 3 days. Now, this is Wednesday here. This is Thursday. And this is a Friday. Now you see the volume. The volume was so low. 21,200 shares traded. So only 21,000. The second day, it is 314 million shares traded today. But 314 million. There are some people who are buying and some people who are selling short. So you will never know how many are short sellers. But the majority are buyers. Majority. But we have sellers also. We have sellers at the end of the day. But it is mixed up. Now Friday, we have 18 million, 0.3, but most of these are sellers because the stock goes down. So you see, the volume doesn't show how many are buyers, how many are sellers. And this is the problem with volume. And this information, guys, the brokers, they will never give it to you, as you might see. Ozzy, Salam, Sabah, Salam, Harman. El Gosh, give the gentleman a like. Thank you very much, Gosh. Herman, thank you very much for coming. Now, Just write what you, if you have a question, Herman. Ozzy said the weekly options for GameStop was overpriced and the delta for puts was below 40 if you were in the money. Unless you shorted the shares, you got clobbered if you didn't short at the top. Lighthouse Show. Hello, Karim. Thank you very much. Now understand, Ozzy. Options. Who make the options? It's the people who owns. The people who owns the shares, they do options. They sell options, calls or puts. So we are not going to go into details about the options. We are speaking about the stock itself. How it moves up, how it goes down. If it moves up, there are buyers. They buy to own. That's why it goes up. Now, when you say to buy to own, it doesn't mean that you are an investor. You are just a trader. Okay? You buy at, as this stock, you buy at $3.67 in the morning at 9:30, and then it goes to $19.75. You make a lot of money during the day, and then you sell at the end. Some people, they come at the end of the day, and they sell short from 1975. It goes to 14, and they make a lot of money. That's it. So do not complicate things. Things are very simple. You go long, the stock goes up. You go short, the stock will go down. This is just demand and supply. Because the stock market is an auction. If the stock is going more and more expensive, people, they buy more and more and more expensive. If the stock is going down, the people, they are selling shorter, and they are making more money. Okay? So I can explain to you this another time. Okay? Another time. With this, it's like a pyramid. Okay. Let's say we take a day, okay, where the stock goes up and then goes down. Okay? So each candlestick here, let's say we make this. This is just an example, okay? It doesn't mean that the stock will move like this, but I will just show you. Okay? I show you how the stock moves. Okay? So, let's say the stock was $20 and it goes to $40. So, let's say 20, it goes to 25, 28, 30, 32, 34, 36, 38, and it reached 40 here. Now, all these that you see, all these candlesticks, all these are buyers. They buy more expensive when the stock is going up. Why? Because we have more demand. Demand, it means people, they want to buy, but it is more expensive, but they buy it. 20 here, they buy it. 25, they buy it. There are new buyers. 28, 30, 32, all these are buyers. People, when they see the stock is going up, they just go and buy. This is just trading. Now, what did happen after when the stock reached the high and it begins to go down? So some people, they begin to sell here, sell short. Now they see the stock is going down to 36, for example, from 40 to 36. Some people, they come to 36 and they sell short. It goes to 33, okay, 32, okay, 28, 23. Let's say it is 20 here, 19, okay? So all these are sellers selling short. Now, but they are not only the same, but there are other kinds of sellers here, sellers who own and they sell, so they don't buy back. So this is because they buy here. Since they buy at 20, 25, 30, 30, they sell at 40, at 36, at 33. They begin to sell because they see the stock is going down and they lose their profit. So they take their profit here. Their profit whenever the stock is going down. But sellers short want to wait. And because they are making money, so they don't want just to sell short from 40 to 36 and they exit. Some they do, but some they stay, and they are making more profits. Okay? So this is what happened in the day. It could be the opposite. It could be the stock is going down and then it's going up. Okay? So hope this explanation gives you Herman said, Karim, do you use Heikin Ashi chart? No. I use only the candlestick. Okay? I use the candlestick, which is understand, guys. The chart is only the visual thing about the price. Now you can look at it as you like. Okay? You can look at it as you like. But for me, my strategies are based on candlestick. Now for me, the candlestick, it fits my strategies. I don't use the line. I don't use the other thing. And if you like it and it's good for you as you see it, it's okay. It's okay. But this candlestick is a Japanese thing. It was used before, I think, in selling rice and selling things. It's ancestral in Japan. And the American, they took these candlesticks and they make the chart, and it was overspread, and all the people in the world, they use the charts right now. A chart is just a visualization of the price. Okay? You can use the line also. You can use the line, but for me and the other kinds of chart, I don't like them. Okay? I don't like them. And that's why I don't even oh, okay. Guys, I will since Herman has spoken about kinds of time frame and charts, I will show you guys how the chart looks. Okay, guys, look at the chart. I will explain to you by our own chart. If you go to setting, you go to plot style, and you see plot style candlestick. Now you can change. This is what he spoken about, Heikin Ashi. But Heikin Ashi, he is the same, It's not a big deal, as you can see. Now you change it to line. Okay, let's stop in the line. You see this? This is here. This is Thursday and this is Friday. Now the stock has been going down on Friday. On Thursday it was going. But look, if you do 10 minutes chart, what did happen in 10 minutes? Now, for me, look at this chart and look at the candlestick. How good is the candlestick? See? The candlestick shows you exactly what had happened in each 10 minutes. Now, I like this candlestick chart than the other ones. Now let's daily. Let's show you more. This is the line, as you can see. I'm just showing you. This is the line. Now, OHLC bar. Okay. Now this here, what you see on the bottom, on the left, is the open. On the right is what we call the close. So the open here is in the morning. It was up. Close was down. In Thursday, it opens low and it closes high. That's why it's green. Here it's red because it begins with high and goes to low. Now, this is OHLC bar. HLC bar, it's nearly the same. There's only the close that it is mentioned in this bar. There are bars like this. They don't show what did happen in the day as going up, going down. It shows only that it is green. It means the stock has been going up more than the previous day. If it is going down, it's shaded with red. But this doesn't give you information, more information. Now, after the bar, we have the area. The area shows you stocks going up, going down. And then we have the Heiken Ashi. It's the same as candlestick. But, guys, I prefer the candlestick. And my students, I always show them candlesticks because when you use the minutes, it's good. See? When you use the minutes, it's good. This is a 5 minute. It shows you what did happen in 5 minutes. Here, for example, from 14, it goes to 19. $5 in 5 minutes. It means if you bought at 14.76, you can sell at 19. You have made $500. If you buy only 100 shares, you can make $500 in 5 minutes. This is sometimes when the people they show their trades and they show, oh, okay, in 5 minutes I have made $500. Yes, this is true. If you continue. If you buy here or here and you stay until the end of the day, you could make a lot of money. It could be 100%, 200, 300, 500, depending on the stock. Okay? So this is the kind of charts. And thank you guys for all your questions. Now, guys, next week, I will be making a video about GameStop. I will try to search and give you more information than what is said in some websites and so. But for me, what interested me is the trading. It's not the reasons and the other stuff, because these things you will never see. The only thing you see is the chart. For example, let's say you don't know about the news. Okay? But if you search by stock screener in the morning, you can find some stocks like this. But you don't know if they do the same, but you understand that the volume is high, and the price has changed dramatically, so you can find a lot of stocks like this. Okay? So guys, it's 1 hour 25 minutes. I have tried to explain this short selling. Is it ethical or not? Understand in the summary what I'm saying is, in common sense, you can't sell something you don't own. This is yes, from this standpoint, yes, it's correct. But the market, in the stock market, going long and selling short is normal. Is normal because the market is something not related to the economy. It has a relation, yes, because it is companies and it has a news and it has a lot of stuff. But when it comes to trading, it has nothing to do with the economy. People, they sell short. You can't stop them because it is legal to sell short. As you buy long. Or you say to me, for example, if you sell short, you manipulate the market. Yes, but going long, if you buy, also you manipulate the market. Because when you buy and I buy, you buy, other buy, the stock price will go up. Now, if I sell short, you sell short, the stock will go down. Are we manipulators? No, we are not. It's just it's the way the market works. And you can't. There are a lot of people before, by the law, they want to stop this selling short, but they can't. Because Wall Street will be mad at them. That's why you will never hear about some people asking about selling short to be banned from the stock market. The market will not have a lot of volatility. Okay? When the stocks are going down, they will be going down just slowly. Not like you lose 50% or 70% of your money in one day. Like in earnings. Sometimes earnings, the stock is 100. Tomorrow you find it $20 or $10 or whatever dollars. It happens in the market. Okay? Because selling short is a normal thing in the stock market, so it has nothing to do with ethical or not ethical, because we are not doing with ethics in stock market, and this activity has been since the beginning of the stock market. Okay, so just to give you an idea about this ethical, is it ethical or not? As you buy long, you sell short. That's as simple as that. This is the Wall Street world. You can't change it. You can't change it. In 2008, where the whole market, the whole companies lost 50%. Even Warren Buffett stock, Berkshire Hathaway, lost 50% of its worth net. Yes, it happened. It happens. They sell short everything. And they make billions and billions and billions of dollars. It happened in the 1929, the big crisis of the 20th century. It happens many times, not just in 1929. It happened in, 1907 and in 1929, and it happened in other years during in 2008 and in 2000, and it happens many times. But it is just all the people, they get interested in selling short and they begin to sell short, so the market collapses. Okay? So understand that this is a normal thing. Now, but there is a big risk. So don't play with selling short. Don't sell short and sleep and go sleep at night, because this is a big mistake that you do, especially in these stocks that are going up, or that is manipulated, or there are scams in it, or there are news in it. So Wall Street always, they do it in the day. They hit the market in the day, and they buy back, and they go sleep easily. But they don't have shorts and they go sleep. No. Some they do, but it is a big risk. Okay? So guys, thank you very much for coming. I am very happy that you come today without notice. And as always, sometimes I don't put a notice, but it is always at 10 p.m. It is at 10 p.m. Our trading account that will begin in December, it is now, I think it's at 55% profit. Most of the stocks are profitable that we have. So guys, those who has never come to see my trading account, so you can just maybe subscribe for 1 month and check what are the stocks that I have and where I am with my stocks. Okay? So guys, if you have no questions, I should let you go, guys. Tomorrow is Monday, if God wills, and hope things will be working good. The market was good last week, and hope things continue to be good for 2021. But no one knows. Maybe one day you get hit. And thank you very much, guys, and see you next week. But before I finish, I will make a video next week. I don't know when, but I will explain to you what did happen with this stock. There are similar stocks. I see them. It's all the same. But this was in the news, so I will give you some information about it. Thank you very much.